Nvidia CEO Jensen Huang said some pretty amazing things at an investor conference on September 11th. He gave investors a clear look at what's driving the surging demand for its products that has driven a 2,000% increase in its sales over the previous 10 years. In his matter-of-fact way, Huang does a great job of relieving investor concerns that the business is experiencing a temporary surge that will reverse soon. Of the 3 U.S. companies that are trading near a $3 trillion market capitalization, Nvidia attracts the most skepticism about its valuation because of how quickly it has ascended to those heights. Investors will benefit by learning more about Nvidia stock before making judgments. So let's get an inside look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Jensen Huang said, we are not going to see CPUs, general purpose computers, that are going to be twice as fast every year ever again. That's not going to happen. The growth we saw in CPU performance over the previous few decades is mostly over with. And that's what CEO Jensen Huang is referring to. We'll be lucky if we see it twice as fast every 10 years. The Moore's Law, remember, back in the old days, Moore's Law was 10x every 5 years, 100x every 10 years. Now that's ended. It's over. That improvement in computational power from CPUs is over. Now, at the same time you have that, the end of that improvement in computational performance driven by CPUs, we have the accelerated exponential increase in compute requirements or demand for computing. We have so much happening online now that the needs for computational power have increased exponentially. And that's happening at the same time we're not getting as much performance improvements. So you're getting that surge in demand without that improvement in performance. And so you're seeing computation inflation. The cost of computing is rising. Now, that might be counterintuitive to many of you that have been able to go out into the market and buy a personal computer with ever faster performance at ever lower prices. But when you think about the computation of things that are happening in the cloud or the computation for recommender systems like the one for YouTube or like the one on Netflix or like the one on Amazon or Meta platforms, all of those computations happening in the cloud, the cost for those computations have risen because of this factor. And so a few years ago, this was all running on CPUs, but now the world's largest data processing engine, which is a recommender system, is becoming accelerated now. So instead of just operating on CPUs, they're now switching over to accelerated computing, which includes NVIDIA's AI technology, which includes AI's accelerated computing full software stack. That's where it's shifting towards because of that inflation that was happening, right? I already explained that dynamic rising demand for computational power with limited performance improvements were creating that increase in pricing for computation. So that's driving this shift now towards accelerated computing because the improvement in accelerated computing is only just now getting started. There's a long runway to go for continued performance improvements. And in fact, NVIDIA is just now launching its Blackwell technology that's going out in the fourth quarter. And then they've already got next year's Rubin technology already planned. So they've already got 2 new generations, which are driving significant total cost of ownership improvements in just the next 2 years. So that's just getting underway for the accelerated computing. And so the CEO is saying the first thing that's going to happen is the world's $1 trillion of general purpose data centers are going to get modernized into accelerated computing. That's going to happen no matter what. So investors that are fearful of demand for NVIDIA's products because they're thinking to themselves, well, where is all this AI investment going to? ChatGPT is mostly free. So how are they monetizing this? Why would companies like Alphabet, Amazon, Microsoft, why would they continue spending tens of billions of dollars for these accelerated computing data centers if they're not getting the revenue in return? And the CEO, I think, does a great job of explaining that there is because just from their internal workloads, they're gaining improvements in the computing performance. There is tremendous amount of needs for computational performance for Alphabet, for Microsoft, for Amazon, for Netflix, for Meta platforms. They need these computing they need these data centers, they need these cloud computing infrastructures to compute their business, right? Their internal workloads. And so just switching from their previous data centers, which were not accelerated, which were based on CPUs, and switching those to accelerated computing is going to be a sufficient return on investment on its own. Just that on its own, it makes it worthwhile. And we haven't even gotten into the AI side of things. Just that part of it alone is going to be worth it for these companies to update and modernize this $1 trillion worth of general purpose data centers. And it's just getting started, right? It's just been about a year and a half where those large hyperscalers have talked about spending tens of billions of dollars upgrading this infrastructure. There's $1 trillion worth of infrastructure to upgrade. They're just now getting started. So in addition to getting that better performance, you also get the benefit of densifying, meaning you can put more computing power in smaller spaces. And the CEO saying the benefit of densifying also is now that you've densified, you can look to cool it because it's hard to liquid cool a data center that's very large, but you can liquid cool a data center that's very small. So the closer together the clusters are, the easier it is to liquid cool. And so going from the older data centers to these accelerated computing data centers, which are more densified, densifying it makes it more energy efficient. So you save money. You save money. And we're not even talking about the AI side of things. We're not even talking about large language models or creating some monetizing opportunities from these accelerated computing data centers. Just from this alone is driving demand for Nvidia's products. And so Nvidia CEO saying we scaled computing by 1 million times in the last 10 years. That's the amount of computational performance they enhanced. And so the question is, now that you have this increased power, what would you do differently if your plane traveled so much faster? Instead of trying to figure out what the algorithms are, we can just give these data centers the data and use AI, the accelerated computing, to determine what the data means. And so I hope these comments from Nvidia CEO goes a long way in giving more information to investors that are concerned about Nvidia stock. After all, Nvidia's valuation has soared in recent years. Just this year alone, its market capitalization has jumped from around 1 trillion all the way up to 2.9 trillion year to date. And so investors might be concerned that this company has increased by too much too quickly. But its foundations are solid. It's building on something that is tangible. It's delivering performance to its customers. And the customer value proposition is so strong that they keep buying. And in fact, they're sold out because the customer value proposition is so strong. And even at these high customer value proposition levels, Nvidia is generating gross profit margins of 75%. So incredible things here from Nvidia CEO Jensen Huang.
Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.